Hello and welcome to Chartbusters. We got the big global event that's coming in later tonight where the Fed is expected to increase its interest rates. For the time being, though the other global markets are under some pressure, the Indian markets, resilient as ever, more or less flattish, and the mid-cap index doing a relative outperformance. With Mangalam, let's get straight to the top stories.
Let's do that as we wait and watch for what comes out of the Fed. We have our own trading session to deal with. First up, frontline indices give up opening gains ahead of the all-important Fed rate hike decision. Later today, banks slip, FMCG and healthcare trade higher, mid-caps outperform, frontline indices absolutely flat.
Mahindra set to acquire a 17.5% stake in Swaraj Engines for nearly 300 crore rupees from Kirloskar Industries. Stocks of Swaraj and Kirloskar surge in trade.
Big block deal in Triveni Turbine. The management of Triveni Engineering confirms that the company has sold its entire 21.85% stake in Triveni Turbine. 11.85% stake has been bought out by fund houses. The remaining 10% has been picked up by the promoter entity.
The RBI dropped Central Bank of India from the PCA framework. The lender can now carry out branch expansion and increase the loan growth. The stock surges. The MD of the bank will be joining us in a short while from now.
All right, with that, let's go straight across to the first corporate that we've lined up for you on the show today. Paint manufacturer AkzoNobel sees a revenue growth of over 35%, rather volume growth of 35% in the first quarter. The question is what happens from here on itself, where, towards the end of the second quarter itself. Rajiv Rajgopal, who's the managing director at AkzoNobel, joins in to tell us more. Rajiv, always a pleasure speaking with you. AkzoNobel, for the benefit of our viewers, sells decorative paints under the brand Dulux. You probably know that a lot more than AkzoNobel itself. The first question, Rajiv, is if you can comment on inflation itself. Is the worst behind you? By when can margins increase? Because I'm not sure if you took a price hike in the first quarter. All of last year, you took a price hike of what, 21, 22%?
Good morning, Mangalam. Thank you for having me on your show. Good morning to all the viewers. Yes, so to start with, last year we had almost taken a price increase of almost about 23 to 25%, depending on which categories you talk about. This year too, we've taken price increases. Yes, we've taken price increases in August and September, about 0.5% each. And we have seen, so in paints there are two parts, both in paints and coatings. There is one, the raw material inflation, and second, there has also been the forex, the currency fluctuation, because we buy in dollars, etc. So I think a combination of both has to be understood, and we've got to tackle it. As far as we are concerned, I still maintain that it will take a couple of more quarters to really see the softening in, coming in really accretive from a margin perspective and from a P&L perspective. So we are still sort of measuring ourselves. We are taking necessary actions both on cost and on value creation to make sure that we are able to deliver strong results.
All right. Hi, Rajiv. Good to speak to you as always. Nigel on this side. You said a couple of more quarters. In the past, you'll have done mid-teen margins. That's that 15 to around 17% odd. Quarter two should see pressure. Quarter three, maybe we give you one more quarter. But by quarter four onwards, do you think margins in excess of 15 to around 17%? Should we look at that band?
I think that's a fair estimate, Nigel. Yeah, you're right. The current and the coming quarter would still see a bit of volatility. But I think by the end of the year, which is the fourth quarter of the year, and thereon, we should start seeing a bit more stability. Now, this has a major assumption, which is that the external world continues to now sort of start seeing benign inflation, etc. Yeah. So keeping that sort of assumption in place, yes, I do see that margins will significantly improve from the fourth quarter, and that's what I've been maintaining over the last few months.
15% by quarter four?
So we don't give, but that benchmark and the band that you've given should sort of be around the band that we would operate in.
All right, 15 to 17% is the band that we'll take note of. 35% of your revenue does come in from the industrial vertical out there. Can you give us a sense of whether there have been price revisions in that vertical? Because, when prices are rising, that's the one that gets hurt more because price revisions come with a lag. But at the same time, when prices start to cool off, that division tends to outperform in margins because, again, revisions happen with a lag.
That's correct, Mangalam. So, as you rightly said, it obviously takes a while for the prices, our customers, etc., to understand. And obviously for us, the price increase to start really getting material. We've seen price increases in different segments, be it in powder, automotive coatings, or in marine and protective. But that's the one which has been a bit of a laggard on pricing. So you're right. So as and when, because even we don't really see it completely in now, as and when we start seeing the margin pressures cool off, you would start seeing an improvement in the industrial segments. That said, I think on the industrial segments, what is most encouraging is the sort of growth that we are seeing. And we are not seeing it now. We've been seeing it for quite a number of quarters. And what I love about the growth is that it's very uniform. It's coming across all the sectors. And it's in a way good because, we get a sense that, it's reflective of the country. It's reflective of the GDP growth of the country. So we see a good uniform growth coming too.
All right, Rajiv, give us a couple of more numbers. What is the volume growth target that you have for this year? And, the last few quarters actually have done quite well. I'm reading a brokerage note where they say that your market share has been increasing in the decorative segment, I think so. Give us an update on both those fronts. Volume growth target for this year. And what about your current market share? And have you gained even in this quarter? Go ahead.
So Nigel, we don't give specific numbers in terms of volumes, etc., the way we are. But suffice to say that we are looking at strong double-digit growth. What do we give targets on? Our intent is now to start really being material in the industry and really start being in the top 3 in terms of growth, both in terms of volume and revenue growth as we start moving forward. So that's really what you started seeing. Yes, we've gained market share in the decorative paints, something that we want to consolidate and build on. Remember, when you look at decorative paints, we've got a very high share in the premium. So when you look at brand Dulux, we've got the Dulux Velvet Touch advertising going on. We've seen across all the channels, etc. So, that's a brand which has really revived very well, doing very well, having strong demand. Similarly, Dulux Weather Shield, which is our exterior brand, is doing extremely well. So, our endeavor has been to really, how do you gain across in the mass market where we are slightly underrepresented historically. And that's not just because of the brand, it's also distribution. And that's where we sort of outlined a distribution strategy, clearly attacking smaller towns. I think what I like about the last few quarters is we are seeing some green shoots in the rural markets while inflationary pressures continue. And that's where we've made a couple of launches this year in some of the segments, particularly in the undercoats, primers, etc., so that we are able to get, a balanced growth across all the sectors and, tier towns.
Take that point, Rajiv. You plan to expand distribution to 35,000 dealers over the next 3 years from 20,000 that you have right now. You also earlier had said that contribution from smaller towns was earlier 45%, now, targeting to increase to almost 50-odd%. But my question is, with regards to ad spends, 6 to 7% of your sales is what you've been typically spending on advertising and marketing. Now you want to become a mass market brand like you're talking about. You want to be the number 3 player from number 4 that you are currently. And at the same time, you're talking about margins expanding to that 15 to 17% band also going forward. So how does that happen? Do you spend more on ads from here and maintain the margins in that band? Or at the same time, you continue to increase your ad spends at the cost of margins at some point?
Yeah, so, now it's going to be what I call triple play. So you've got to start increasing the, work on advertising. We actually spend 3 to 4.5%, not 6%. Our endeavor is to come to 5 to 6% on terms of advertising. And you started seeing that. I'm sure you've all seen the advertising. It was even seen during cricket, etc. So we are there now. We are back on the face. We really want to make the brand, get the brand and the consumers to India to brand Dulux. Coming to the, the work, look, there's a lot of work happening on value creation. And we are working on this. We have got a lot of support from our R&D, and we are looking at strong value creation. We are also looking at productivity very, very strongly. Yeah. And those are the measures, for example, in our factories, we put a huge amount of automation, IoT, etc. So with that, we should start seeing also sort of the margin, flow improving.
All right, Rajiv, very quickly, you're at number 4, right? You're looking to get to number 3. What's the difference between, that spot right now?
So look, in paints is very close because remember that the number 3 player has a higher representation in coatings. And let's also understand that we've not made any acquisitions ever since, acquired ICI. I think, in a couple of years, we should be there. I'm hoping it's faster, but our endeavor is that, look, at least come close to a 5,000 crore in a couple of years. And I think we are on the right trajectory. We've got a very ambitious internal target, and we are working on that right now, Nigel.
All right, take that point, Rajiv. Thanks a lot for joining in and giving us all those details about your business. As we speak, wish you good luck, but bad news comes at the time right now as we speak. We did have a flash which said that comedian Raju Srivastav has passed away at the age of 58. A person known to bring a lot of smiles to a lot of faces. His health condition had worsened after he met with an issue which was basically he had some sort of concussion or something, Nigel. Extremely sad. Was known a lot for his observational comedy.
Well, strength to his family and condolences from all of us here at CNBC TV18, and may the departed soul rest in peace. For the time being, we'll slip into a short break, come back, continue our focus on markets.
Right, let's talk about some ideas for profit coming in from our colleagues at Money Control Pro. Today we do have with us Nitin Agarwal, who joins in with the stock that he's been tracking closely.
The company that I have chosen for today is Sona BLW, an auto component manufacturer. The stock price and the financial performance of Sona BLW has been under pressure due to weakness in demand from Europe region and significant rise in commodity and energy cost impacting the operating margin. The stock price is down around 38% from its all-time high attained in December 2020. Now, there are multiple triggers for the company. First, it is one of the rare gems in the listed space to play the theme of electric vehicle space. It generated around 29% of its total revenue in Q1 FY23 from the EV segment, and the company has already attained a leadership position. On the back of strong technological know-how, the company has been able to develop a wide area of products to cater to not only to the ICE engine, but to the electric vehicle as well. During the last quarter, the company added 6 new EV programs, taking the total program numbers to 23, out of which 13 are yet to commence the production. Moreover, the company has an order book of around 20,500 crores, which gives earning visibility. Important to note that 60% of this order book is related to electric. Lastly, in terms of valuation, the company currently trades at around 44.3 times FY24 projected earnings, which we believe is at an elevated level. However, given the strong fundamentals of the business and the massive growth opportunity, we advise investors to accumulate this stock in staggered.
Thanks a lot for that, Nitin. Well, we'll slip into a short break. When you come back, we'll focus on the management of state-owned Central Bank of India on the back of its exit from RBI's PCA framework. Welcome back. You're watching Chartbusters here on CNBC TV18. Well, the Central Bank of India is searching after the RBI removed the bank from its prompt corrective action framework, which will now allow the bank to add more branches and also focus on loan growth. Well, to understand what's the strategy for the bank going ahead, Mr. Rao, the MD and CEO of Central Bank of India, joins in. Hi, Mr. Rao. Thanks so much for joining in. Well, it's a relief that's come in. And, you have been mentioning this, that you've been complying for the last few quarters, and you were hoping that this will happen. I'm wondering, why did this take so long? If you could give us, any kind of color that you have. And also, what specific restrictions get lifted post this? If you could quantify it in terms of branch expansion, management compensation, and the likes.
Yeah, thank you. First of all, let me thank CNBC for giving me the opportunity to share the joy of my 33,000
Pleasure to have you. Yeah.
And coming to a specific point of, for the past 6 years, we are under this certain restrictions. But as such, it has helped us to grow in a very orderly manner. And going forward, even after lifting, we are not going to change our business model in a large extent, but certain aspects where in acquiring certain assets, where we had certain restrictions that will move away, but our bankers' prudence will always prevail over that. this is my limited submission. Actually, this has helped the bank to grow in a very orderly and controlled manner. And that's why, even in this MTM losses of March, and ours is the bank where we had zero MTM provisions. That is how we could able to maintain, because we had a very large investment book, because our CD ratio was only a 52 earlier, now it has grown to 57. So large amount of money was placed in my treasury. Even with that, we could able to manage in a way that that MTM losses could not hit us.
Take that point, sir. Just wanted to understand how much of your growth guidance that you had given for 10 to 12% was, factoring this coming out of PCA itself. And now that you have come out of PCA, do you think you can grow faster than this guided band of 10 to 12%, return on assets of around 0.5 to 0.6%?
This is already factored. When you have given this guidance, we have factored that we will be coming out of the PCA because the measures what we have taken. And we know that it is only a matter of time, and also the confidence what regulator will be getting on our activities. That's why we have factored all these things when we have given this projection.
So there is no upside to this guidance that you're giving already because of you coming out of this PCA?
Only I can tell you our gross NPA will be drastically coming down because of our own planning what we have now.
To what levels?
Below 10.
Okay. And this year itself?
This year itself, yeah.
Okay, all right. You have a couple of assets as well in your kitty. I think Central Bank Home Finance as well as Bank Financial Services Limited. I think you have around 64% and 100% in the other one. Any plans of monetization of a couple of these assets? If you could give us a roadmap, a time frame, and also as of today, according to you, what is the value of these assets?
Actually, our Central Bank Home Finance, you may be knowing that it is only the Home Finance NBFC where deposit taking license is there. Right now, there is no plan to monetize. We are only focusing to enhance the value in this subsidiary. And for that, the headquarters also, we have changed it from Bhopal to the Bombay for better, decisions to take. Though it is an arm's length distance we maintain, but in Bombay, entirely a different market where our home finance management will have the broad picture of the NBFCs and going along. How to increase the book, and then what are the milestones they have to achieve, we have specified to them.
So no plans to monetize both these two assets then, as of now?
No, we are not monetizing. We are going to enhance the value in this.
Okay, all right. Let's flip it around. Any plans of privatization? Have you heard anything? I think Central Bank's name crops up with the other banks. There's a smirk on your face. Have you heard something? If you could...
See, there is nothing, no news from any of the quarters, except I am also watching your media only about this.
The media is watching you and you're watching the media, sir. We'll play this game until there is something officially which is announced. Let's talk about your asset quality. You did speak about your GNPAs falling below 10% this year itself. What are your thoughts on the credit costs going ahead? What kind of NPAs can you contain your book to?
Yeah. See, right now, my net NPA is at 3.93. And the way we are working out the slippage ratios, SMA book and stressed assets, restructured portfolio, what we have evaluated all these portfolios. And in corporate book, we have a minuscule, it is only below 100 crores that may be moving into NPA. Otherwise, the entire corporate book is healthy because we maintain the balance of 65-35. That is 65 will be the RAM and 35 will be the corporate. That balance we are maintaining, and going forward also we maintain. So in this scenario, on corporate side, I have no issues. As far as in the RAM segment, we have a total grip on the asset quality and also on the SMA book. Okay. So the slippages, what we are envisioning for the quarter of September will be around 1, not more than that.
And NPAs will go below what, 3%, or would you?
No, it's not that. We have given the graded gliding path where from 3.93 we will be touching around 3.6, 3.55. In that range we have given.
By when? End of this year or in the coming quarter?
for the December. For the
December.
next March, it will be around 3.4.
3.4 by March 2023. Okay. And what about NIMS? You want to give us a guidance out there? And also on the credit cost front, if you could tell us.
Yeah. Regarding this credit cost, we have made it around 1 to 1.20. That is the range we are holding on to that. And coming to your NIM, earlier also we have given the guidance of floor level of 2.75, and in all these 5 quarters where we were meeting all the PCA benchmarks, we were never came below the 2.77. Always we are above the 2.77.
So you've improved upon your credit cost guidance, because from 1.5 to 1.75 earlier, you're now saying it'll be 1 to 1.2%.
Yeah, exactly.
All right, that makes sense. And any further cost-cutting plans that you have? You know, there were reports of you rationalizing some branches, etc.
No, rationalization is always a ever-growing. It's a continuous call we take on the unviable branches.
Okay.
This time we are focusing more on the profitability of each of my unit.
Okay.
That is whether it's a branch or PC point or POS machine or ATM.
Okay.
I want to make unit profitable.
All right.
In that we are evaluating.
Mr. Rao, total number of branches you have as of now. How many of them do you think that you'll be shutting down, which may be not very profitable, if you could tell us that? And also you'll be looking at addition. Now you've come out of PCA. You have that license, I believe, to go ahead and add branches. So give us some clarity on that front very quickly.
I cannot put the figure right now because it is just we have given clearance for the 12 branches to be closed down. That is, in fact, it is merger with the existing branches. So I cannot give you the perfect figure because it is a continuous valuation.
Okay, all right. Your shareholders have liked what you have said, but your employees will get a compensation management increase. Is there a compensation increase that they can look forward to very quickly, sir?
Sir, as far as the public sector bank is concerned, no individual bank can incentivize any of the employees.
Okay.
No, it is a settlement at the industry level.
Okay.
All right. Thanks a lot, Mr. Rao, for joining in, giving us all those details. The stock opened well in the green and holding up with gains of almost 8%, as you say that your guidance has already factored in you coming out of PCA. So there's no further upside to loan growth, but you have improved your credit cost guidance from here itself. With that, we wrap up on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.